With the current unrest and uncertainty in global financial markets, many are wondering what to do to protect themselves from taking a serious financial hit. Joining me now to talk about it from Moose Jaw, Saskatchewan is Aaron Ruston. He's the CEO of Purpose Financial Corporation in Saskatchewan. Aaron has an MBA and has been voted as one of the top 5 financial advisors in Canada 5 years in a row. Aaron, welcome to BCN.
Thanks, Hal. It's always an absolute delight to do anything in association with you guys. So thank you.
Oh, you're more than welcome. Now, the financial markets, as we've seen, have taken a big hit as a result of the COVID-19 pandemic. Can you really explain how the markets work, and why is the COVID-19 pandemic causing stocks to drop significantly?
Sure. Well, really, what has happened in this particular situation is really markets tend to rise and they tend to fall over time. You have bear markets and bull markets, so downs and ups. What has really hit this market in particular is the uncertainty that this pandemic has brought about. So when uncertainty sets into the market, people start thinking they're going to lose their jobs, meaning they're not spending money, meaning they're not getting out and doing what they do, and that throws people into a bit of a panic. So what has happened now? We've seen a historic drop in the market. We've seen other market drops over the years. This one was relatively quick. So that's really what is happening now, right? The fear comes on. You add that on top of that, the oil prices. I don't like to talk about to people in Alberta about oil prices, but we see the big conflict between Saudi Arabia and Russia and that, and it's the perfect storm in a lot of ways. But remember, storms pass, right?
Absolutely. Yeah, we see West Texas Intermediate under $20 a barrel, historically low gas prices right now as well. That's the joke, I guess. You know, it's like, hey, have you seen the price of gas, how great it is? But then in Alberta, have you seen how the price of gas, how bad it is? You know, I
Yeah,
mean,
isn't
that
it
means,
something?
yeah, it's really something. So where's the smart money? Is it maybe in precious metals, putting it in gold? Some industry analysts say we could see gold hit maybe $2,000 an ounce.
Well, it's currently trading about $1,716 an ounce right now, or so. You know what? Gold is just really another equity investment. Not any different than stock markets, cash, bonds, or whatever. It's just purely one more place to put your money. Now, in the past, gold was kind of the sanctuary where people ran to and the market started doing wild and crazy things. That and cash. Right now, we've seen the price of gold spike over the last little bit again, and some other precious metals. But you know what? Just my perspective and what we're seeing, gold prices will relax too over the next bit as markets start to come back, money starts to roll back into a more liquid market. Gold prices probably will drop back down. So don't get caught in that high gold pricing trap as well.
Aaron, some people are really concerned that their investments and their pensions are going to be lost with what's happening with the COVID-19 pandemic. Do you offer any insight into this? Should we really be concerned about that?
Well, I guess it really depends on where you're at in your journey. What chapter are you in your life? Are you going to be drawing on your money fairly soon? What is the asset allocation within your portfolio? When your advisor sat down, and I hope everyone listening has consulted with a financial advisor. And that was not a paid advertisement, by the way. I'm just saying that you really should. If you're at that point where you're starting to draw money out of your pensions, and your pension has not been adjusted accordingly to take advantage of maybe some of the more stable investments right now, yeah, you're at a risk of not losing it all, but certainly seeing the values drop, but even for a short term basis, I would say. So, not fear, not panic, but concern. Be talking to your advisor and saying, hey, you know what? If we miss that drop, what are we doing now to make sure I'm going to be gaining some money back here when things turn around?
And if you have the cash, isn't right now a good time to buy?
We would tend to hold off. We've seen a good recovery. The markets have dropped about, I believe, just over 30% from their highs of February. But we've seen a good bounce off the bottom. And in fact, over the last couple of days, we've seen some pretty good rise again in it. I would say we're probably going to see, and this is I'm not my professional opinion. We have lots of economists and stuff that work with us in this. We're probably going to see a bit of a contraction again coming back on with this COVID. They talk about this second wave, whatever that means or whatever that looks like, and we think it will pull back a little bit. I would tend to hold on. Or if you have cash inside, what I tend to do with our clients here and my partners do is we'll start to move 1/3 of our cash in at a time. So buy good solid investments that are down. Maybe they're down 40, 50%, some of very solid stocks. Buy in 1/3 now because they're still good stocks. They've just got caught in that oxygen sucking vortex that's pulled everything down. Buy in now, let them rise a bit, and just monitor it. That's what I would do.
Some people have expressed concern as well, Aaron, that banks are going to crumble. Is that even possible? What would that take for that to actually happen?
Well, you see, our banks are really more secure, so to speak, than the U.S. and other banks. For one, our Bank of Canada is really supported by the government of Canada behind the scenes, so to speak. They're the main level of borrowing for Bank of Canada. Then it goes from Bank of Canada down into our chartered bank system. So we have a two-tiered system. We have banks like TD and CIBC and Scotia and RBC and BMO that are our Category 1 or Tier 1 banks. Then we have the banks underneath, the Tier 2 banks. So they're secure. They're far more secure than some of the other country banking systems that we see. That is for certain. They are susceptible to market bounces, as can anyone that has owned stocks in the banks can attest to. But you know what? They will come back. If you think about it, Hal, every transaction you or I do, or our companies do, are channeled through the banks one way or another, sometimes 4 or 5 times. Thus the big profits, thus the returns. They will come back. I wouldn't worry about them collapsing, that's for sure. But their values may well be contract even a little bit further than we've seen them so far.
Are there some business sectors that are really poised to make a solid run with this new economy and reality that we're living in now?
Yeah, we really believe there are. Not only on a global sector like geographic, but if we just bring it down to overall, we're looking very strongly. Once interest rates start to come back up a little bit, which they will, we feel the financial sector is going to show well. Banks, life insurance companies make very good money as interest rates start to come back. The financial sector, as we just talked about, how is hit hard right now because bank stocks are down overall. Industrials, things like lumber companies, tool making companies, and those as building starts again. It's slowed down now, but it will come back. Consumer discretionary, leisure travel. Right now, we can't go anywhere. Oil prices and gas prices are at historic lows, but we can't drive anywhere, right? It's kind of ironic in that. So those will come back. Technology, we believe what this has proven to us, even with what we're doing right now, it proves us to, again, how important technology is becoming in our lives. Zoom, Skype, other Facebook, all of those things are our way to communicate. And I think as the demographic continues to expand, meaning even the older chapter sector are getting involved, those values are going to start to rise as well. So that's kind of a Reader's Digest snapshot of where we feel the growth is going to be over the next year or so as things start getting back to normal.
Where do you see the agriculture sector headed? The grains, cattle, a lot of
Yeah.
livestock?
Yeah. Well, that's a tough one because our firm, we do a lot of work in the agricultural sector, whether it be with dairy or grain farming, and prices have been pressed down for a long, long time, not only in Canada but on a global basis, demand, and now with some of the slowdowns in railways and all of that type of stuff too over the last months before this. You know what? We feel it will recover. It is going to be a tough haul. I deal in reality, and it's going to be a tough haul for the next little bit, which is too bad because it's really the breadbasket, literally, of our country is right here, Alberta, Saskatchewan, and stuff. But you know what? We feel it will recover. The markets just need to open up. The economy needs to loosen up again. Doors and stores need to open, and then hopefully things will get rolling back.
Aaron, is there some strategic tax planning that businesses can really do to minimize their losses?
Well, right now, if you're in an open position, meaning let's say you have a non-tax-free savings account, non-RSP type investment, so just cash in stocks. Okay. Now there have been some sectors that have been hit even more dramatically than others. So what we say is, depending on your information coming from your accountant and all those things, we're actually talking to people sometimes about selling off for tax losses. Okay. And what that means is if you have a stock, you bought it at $100, it's at $70 now. And you say, well, it's probably not going to come back for quite some time. Or that widget sector that it was in no longer even exists. Look at maybe selling that off, taking that loss, which is a capital loss, and down the road, as you get capital gains on your other stocks, applying it towards that. And the thing about capital losses is we can only use them against capital gains. But when we pass away, I know I shouldn't be talking like that, but when we pass away, capital loss can even be set off against other offset against other taxable income in that year as well. So lots of uses, but that's stuff you should be talking to your accountant about and your financial advisor.
What about the Canadian real estate market, Aaron? Is now a really
Yeah.
good time to buy? I've noticed in Toronto, Vancouver, Calgary, even here in Lethbridge, it seems like the market's gone a little soft.
Yeah, which is really interesting, Hal, because we were actually just on a conference call the other day about where the real estate market, both commercial and residential, is going to go, and they're still showing a rise of about 6.2% from 2020 into 2021. Now that seems pretty dramatic to me, right? But again, I'm not the real estate expert or anything. They feel that it's going to be some declines, and sorry to say this again to Albertans and Saskatchewanians, some slight declines in Alberta, Saskatchewan, Newfoundland, and Labrador. Ontario, Quebec, those are supposed to see some rise, but overall they do see some positives in the real estate market. Right now with this COVID, with the real estate and rental incomes coming off, it's been a little tight because of loss of jobs, but they still see over time a rise. I don't know if 6.2%. That's what we were told. That's pretty aggressive from my perspective, but I do believe we'll still see prices rise on a broad base right across Canada.
Aaron, labs around the world are frantically working right now, overtime, the scientists, to come up with a vaccine for this COVID-19. Labs in Israel, across Canada, especially in Winnipeg, in the United States. Should we maybe consider investing our money in some of the pharmaceutical companies?
Yeah, I would say that that's actually one of the areas that we are looking into as well, because Gilead today, for instance, is one of the stocks that has. There's some hope that they may have found something that may have some impact on the virus itself. So yes, I believe there will be growth in that side. The biggest thing with investing in pharmaceutical companies is they have patents, they have those types of things on drugs, but after a number of years, those patents run out and suddenly you get generic. So the thing is with pharmaceutical companies, get the run when they have something that's solid, that addresses something that is serious, broad-based condition. But they're a brief run. You take the run and then you pull out because as their patents run out and those things, generic stuff starts coming back on, their value drops.
How about investing in some of the grocers, especially right now with the food supply, right?
Yeah. Well, I'll tell you, companies like Costco and those types of things. And again, I don't mean to mention names. This is no advertisement for any of them. But companies like Costco and that type of stuff, they're the bulk type buying place. But those types of things, I think, in the future will continue to grow, as will some of the other suppliers. Now, I believe, Hal, that we're going to see a change in how stores are operated, how they deal with their people coming in and leaving, because people will be more aware of what's going on and more fearful, I think, for at least the next bit. Even though we may see the numbers dropping of new cases and recovery numbers going up, I think grocery stores, those types of things, are going to have to make some changes. That's for sure. Keep an eye on it, and we believe there will be some growth in them because I think there's going to be a lot of pent up demand. And soon as things start relaxing a bit, we're going to see leisure and entertainment and even shopping. Maybe people will buy 2 bags of broccoli, not just one now. That type of stuff. So there's going to be more, I believe. Yeah.
And toilet paper, don't forget, we have to invest in that too.
Wasn't that interesting?
Now, you're also a man of faith, Aaron. Do you have any thoughts on how to really weather out this financial storm while keeping a proper perspective on the big picture?
You know what? I think sometimes as a Christian and a Christian financial advisor, I have to say sometimes as Christians, we throw around the whole cliche saying of God's going to take care of it. Okay. And God will take care of things. He has the best for you. He has the best for me overall. But He is in control. He gave us a brain for a reason, and that was to think things out, make good decisions, make good plans in every part of your life, whether it's for your physical fitness, your financial fitness, your overall health. So I think the Bible is very clear on how we are to deal with our finances, how we're to deal with our health. And he said, the Bible says there will be storms. I'm paraphrasing. That's the Aaron Ruston version, okay? there will be storms and those things. But I believe, I know, God will see us through all of this. Be strong, be diligent, and stay safe. God's got you in his hands. He's taking care of all of this.
Stay safe and keep the faith. Aaron Ruston, the CEO of Purpose Financial Corporation of Moose Jaw, Saskatchewan, thanks so much for your time today.
Thanks, Hal. Always a great honor to be here.